Hello traders, welcome to Quantsap. My name is Diljit and today we are going to talk about Ironfly and Diagonal Spreads. How do we create such kind of spreads and what kind of benefits you get out of it? How do you set it up? What kind of risk parameters you need to check before initiating such kind of trades? We'll cover all of this in this video. Right, so before jumping on to the video, if you haven't signed up Quantsap yet, you can sign up now. As and on you'll sign up Quantsap, you will unlock 20 plus free tools which will help you in your options trading journey. Right, so if you want to know what is Quantsap, you can go here on the learn section and you can go on the video library. You can check out multiple videos here. Okay, so multiple strategies or how to use the tools in Quantsap you can check out here. And if you have any doubts or queries, you can come here in the support section and you can write us or mail us and we'll try to help you out. Right, so let's jump on to the video and let's understand what is this Ironfly and how do we basically initiate the trade. So Ironfly, okay, so Ironfly is basically iron butterfly. Okay, so generally in butterfly what we are doing is we'll buy a call, we'll sell a call and put. Okay, and generally to hedge the particular positions we tend to go for the OTMs to buy. Okay, so what do we do in Ironfly? Basically what we are doing is firstly we'll sell. Okay, so two legs we are selling. Okay, one will be at the money call, second will be at the money put. Okay, so these are the two initially the first two positions which you need to create. Okay, so at the money call and at the money put will create a kind of a straddle. Okay, so it will be somewhat like this. Your PNL chart would be somewhat like this. Okay, now basically when you do such kind of a strategy, you can make the most out of the sideways market. Okay, so your point of benefit here is, okay, so your profit here when your profit here is when there will be a theta decay. You can take a advantage of theta decay. Okay, as and on the expiry is coming nearby, you can take the advantage of theta decay with the help of this particular strategy. Okay, secondly you can take the benefit of the sideways market. Okay, so generally whenever you want to initiate this kind of a strategy, you need to check out if the market is sideways or not. Okay, so the market, if it's trending, or the particular stock if it's in a trending direction, you can go for a directional kind of a trade. But if you're going for a this kind of a trade, you need to go for a sideways particular kind of a market conditions. Right, so now basically when you look at this PNL chart, you can see you are having good profits at this area. But here when we talk about here on the either ways, if the market goes either of the direction, you can face heavy losses. Okay, so that is why what we're gonna do here is that basically we're gonna add two more legs. Okay, and what we'll do here is we'll buy one OTM put. Okay, so we'll buy an OTM put and we'll buy an OTM call also. Okay, so this strategy is four-legged strategy. Okay, so now this is the final set of the strategy. Now these are the four legs which you need to initiate, and when you initiate this kind of a strategy, somewhere the PNL, when it was looking like this, it will become like this. Okay, see, somewhat like this. So here you will be having your profit and the loss will be capped here. Okay, so your maximum loss will be defined here. So again the risk part will be managed. Okay, so risk management will be done here, and with this kind of a strategies, as I said, you can make benefit of the sideways. Right, so whenever you want to create a strategy where you need to make a benefit on the sideways market or the market which is not in a direction, so this is the time you can use this particular strategy. You can take the benefit of theta decay, and if the IV also decreases, somewhere you can make more benefit out of this strategy. So this strategy you can use. Okay, so benefit of this strategy is that your loss is defined. And when you talk about risk to reward, you get generally there is a good risk to reward in this kind of a strategies. right? So you can go forward with this strategy if you are initiating the trades in the sideways market. So before we move on to the next kind of a strategy, I need to tell you the important point of this Ironfly is that basically you need to initiate such kind of strategies when the implied volatility is at a lower conditions, like pre-event, let's just say ki pre-release of some kind of information, or if there is any kind of a news initiating, you can use it before that, so that is the time it can be most effective. And second thing is that somewhere if your position is being threatened by your short position, you can adjust it also. So let's just suppose if one of either of the sell position is having a threatening your particular strategy, so you can square it off and you can go for the other particular strike. So this way you can adjust the particular strategy also, right? So now nextly we'll talk about the diagonal spreads. Okay, so diagonal spreads is basically a combination. Okay, so what we are doing here is we are buying one leg. Okay, so buying, let's just say at the money. Okay, at the money call option. Okay, so now we are buying at the money call option, but this time we are changing the expiries. So in the diagonal spreads, basically we are trading with different expiries. Okay, so let's just suppose you buy the at the money call for the given week. Okay, so current week, sorry, you buy the let's just say monthly expiry. Okay, let's just suppose you buy the monthly and you sell the current week expiries. See, sorry, just a second. Right, so what you're gonna do is you're gonna buy the at the money call, let's just suppose of the monthly expiry, and similarly you'll sell the at the money call. So now what we are seeing is that we are using two expiries. So whenever you use two expiries, that is the time you create a diagonal spread. So here what kind of benefits you are gaining? You are gaining benefits from a longer time. Let's just suppose how we will increase benefits. Okay, so in the benefits you can see that basically in longer term you can make benefit out of the IV increase. Okay, how so? Is because see there is two expiries included here. Okay, so let's just suppose if the IV is increasing in the longer term, generally you get benefit out of it. So the other way to make profit out of this strategy is that basically, as you are seeing that we are selling. Okay, so we are selling current week expiry. Okay, so if we talk about monthly, okay, and current week, we know that the theta decay is faster here. Okay, why? Because this is near expiry and this is far expiry, right? So this will take time, but this is gonna expire near. So we are selling this call and we can take benefits of this, and in the near future you are expecting the particular stock to go up or the index to go up, so you can take the benefit out of that also. So two kind of benefits you can take out of this diagonal spread. Okay, generally before the new rules we are having a difference in the margins also, but somewhere I believe now the margins are similar to the normals. So now you can basically use this kind of strategy when you are having a slightly view. Okay, so let's just suppose there are two types of diagonal spreads. Okay, one will be bullish. Just a second. Okay, so one is bullish, one is bearish. Okay, so bullish diagonal spread generally you create when you are having a moderate bullish view. Okay, so it's not like a purely directional kind of a strategy, but if you are having a moderate bullish, if you are thinking that the market or the particular stock can go mildly bullish, you can go with a bullish diagonal spread. Okay, just a second. Yeah, so you can go with a bullish diagonal spread. Somewhat it will see somewhat like this. See, this will be your kind of a PNL. Okay, so here you are facing losses, here you'll make profit. Just a second. Here you'll make profit, and here you'll also make profit if it goes on the bullish side. Similarly, your PNL here in the bearish side also, if you are mildly bearish in the particular stock, so you can go with this kind of a this thing, and your PNL will be somewhat like this, that you'll make profit here, you'll make profit if it goes down, but if it goes up, you can make loss that way. So this kind of strategies generally you use to beat the current time decay, so you can make benefit there. And in the long term, when the IV will increase, this particular buy of the at the money call will also make you a little bit of profit. So this way you can use these two kind of strategies. Okay, let's just go to QuantSap and let's just try to create an example how you can initiate this kind of a strategy. So we'll go on the trading here and in the options architect. So let's just suppose we will initiate a trade in Nifty only. Okay, so simply we'll go on the custom. Okay, so Nifty at the money levels is somewhere around 23,350. Okay, so what we'll do here is that we'll go and sell both call and put. See. So as I said, this will be the kind of a PNL. Okay, just a second, we'll go on the next week expiry. See, so as I said, this will be the kind of a PNL you will be seeing. Okay, so in this PNL you can see that if the market is in this range, okay, almost around 23,000 to 23,700. If Nifty is in the 700 point range, okay, you can see the expiry break evens given to you. So almost 700 to 800 points range is provided to you. Okay, so if you're gonna go with this kind of a strategy, generally you'll tend to make money out of it. Okay, but again you can see the risk you can see. So if it goes haywire, if it goes to either direction, as you can see, you can face losses, that is unlimited losses. So it can exceed to how much ever you want. Okay, so to avoid this kind of a strategy, what you can do is you can define your risk. How? As I said, you need to go on the OTM legs. Okay, so as you can see that basically I have added more two legs. Okay, so now I have bought C and P. Okay, so initially we had sold the at the money levels, and now we have bought OTM call and put. And as you can see, this strategy is a credit of 4,900. Okay, and you can see particularly if you see the break even is also having a good range, almost around 400 to 500 points. Okay, so generally Nifty tends to go in this range only. If you are expecting not a big momentum, Nifty can go in this range for 500 points. So what you can do is you can come in the table section, as you can see. Okay, so your maximum profit and loss is defined here. Okay, so as you can see, the range is identified to you, and as you can see, the maximum loss is around 1,200, which is defined to you. So as I said, that basically the most important part if you want to go with any kind of a strategy is the risk management. So risk management is properly done here. Okay, so your maximum loss is around 1,200, and your maximum profit is around 4,300. So it is almost like 1:4 kind of a risk to reward strategy, which is well and good. Okay, again, as I said, that if your forecasting is well and good, you can go with this kind of a strategies. As if the market is in a sideways direction, you can make money out of the short and butterfly strategy, as you can see. Okay, so you can create such strategies in the sideways market, and whenever the IVs are low, and you can make benefit out of this, right? Now let's just see that how you create a diagonal spread. Okay, so now we'll understand how to create the diagonal spreads. Okay, what all things you need to add and how we'll create a diagonal spread. Let's just see. Okay, so what we'll do is the coming expiry. Okay, we're gonna sell the current coming expiries at the money level. Okay, so this is the kind of a PNL you are seeing. Okay, but again, when you are selling, it is always basically unlimited loss you are having. So to hedge that, what you're gonna do is we're gonna buy here. Okay, but we are gonna buy the same level but the next expiry. Okay, so this will be the some kind of a PNL would look like this. Okay, so this is the diagonal spread. As you can see, this is the long calendar call. Okay, so you can go for a long calendar call or a short calendar call. Sorry, long calendar put. Okay, so as you can see, I've created a long calendar call. Okay, so what we have done here is that we have sold the current coming week's call option at the money, and we have bought the next coming, let's just say next month's expiry. Okay, and we have bought the call option at the money. So this is how the particular PNL is looking to you. Okay, so this is suggesting you that this is the loss area, but if the market is in this range, generally you can make benefits out of it. Okay, so as you can see, somewhere you are having a good profit. So as you can see, we have created a long calendar call here in Nifty. Okay, so what we have done here is that we have sold the current expiries at the money call option, and similarly then we have bought the call option of the next week's expiry. Okay, so now as you can see, in this particularly we have taken one lot only. So in one lot you can see this is kind of a PNL. Okay, so your main profit is somewhere if the market is in the near the at the money level only, and if it goes far away you can face losses. But your, as you can see, this is a debit strategy of 2000, so your max loss is around 2000 only, and your max profit will be somewhere here, which you can identify. So this is the way basically diagonal spread and the Ironfly is used. Okay, so they are both having their own specific way of doing it. So these are the two kind of strategies which you need to understand. Okay, so they both have their own benefits and they both have their own conditions in making. So as I explained before, you can make these strategies and you can make benefits out of it when the IVs are low and when the IVs are high. Thank you so much guys for joining. If you like the video, just press the like button. Thank you so much everyone. If you have any doubts or queries, you can drop it in the comments.